Okay, good morning. This is Simon with Trade and Perform Coaching doing the market preview for the 28th of March. Just quick legal notice. You can pause it, read it. Past performance not indicative of future results. Amen. This is for educational purposes only. I'm just sharing my trade plan, guys, in hopes that it makes you better. It's my plan. I don't always execute it perfectly. I do my best. I work very hard to control my P&L, particularly on the downside. And I just take it one step at a time. You can lose a lot of money trading futures. Please know what you're doing. So the preview is going to be a little bit different this morning. I've already posted up the charts for members. Let me see. So I've changed a few things. Let me close this file. Close chart book. Save. Yes. There we go. A little bit less stuff going on. And NQ and CL and ES and everything else is climbing after a little bit of selling in Asia last night. So I changed up my chart books a little bit. So a bit of house cleaning. There's the fractals are still the same. The stars have changed to arrow. So everyone knows I've been playing with this concept of having these stars over here to the left. They've changed a little bit. Instead of stars now, they are same indicator. It just shows me where there's a shift in the point of control, and it's arrow up and arrow down is what it does. And I'll talk about a little bit about that through the course of the day. However, don't make too much out of it yet, right? It's more for me. It takes a while to mentally process what the heck it is. But I will go through it, and we'll see if we can get everyone to understand what the heck it is that we are doing here. Number one, let's talk about the profiles a little bit. Levels have been posted. Obviously, let's see, we have CL, too many CLs, NQ, and I don't have my ES chart. So what I'm going to do is NQ. We're going to minimize that. We're going to minimize that for now. What is it that I did with my ES profile? Okay, I know I changed these around. There we go. Okay, so therefore, I should have a corresponding 5-minute chart that says ES, but I don't. I do not think. So what we will do, here's how I'll fix that. Chart settings, copy, cancel, chart settings, paste, advanced settings, chart number 20. Okay, that should come up in just a second. And then chart detach. Okay, so thanks for being a little bit patient with me. Here is ES. Okay, so those are the support resistance levels, prior day's high, prior day's low. So when you look at the 5-minute chart, so there's levels above and levels below. The number one thing you're going to notice is see how the range has expanded, right? Look at that. See how much bigger it's gotten? You've got to adjust. It's like almost immediately visual that the size of the 5-minute bars, everything has gotten bigger in here relative to where we were. And that's a 60-minute chart. Let's knock this down to the proper time frame. Here comes your 5-minute. And you'll see the same thing. Okay, so there's 5 minutes. It's the same story, right? And what's that story? We're burying shorts, right? Before, right, the pattern was, if you look a couple days ago on ES, it's the same with NQ. You could buy the open, right, for weeks, buy the open, and it pretty much went up most days, right? And this is going all the way back here. Buy the open up, buy the open up, buy the open up. Almost every day for people who are buying the open, they were getting very well rewarded, especially early in the day, okay? But then we get to these nasty little rip downs where you just get annihilated. That's why that's a 50-50 trade and creates boom bust. Okay, next. We are sweeping this range in general. See how we're sweeping all the way through here and all the way through here. So there's support resistance areas in here, but guess what? The market's truthful. When it sweeps through here, it can sweep through here. And if you look back to the left, right, you will notice we swept through here and we swept through here. This area, this 2830 to 2790 is sweeping, right? You're not getting small counter rotations. You're getting big, wide, fast, sweeping moves. Note it, right? Just go like, oh, that's part of the deal. I've got to be aware we're sweeping up and down, and that's cool. The other thing to notice is when you pull that chart in, right? If we do that, which I don't think I can for some reason, I will show you in just a second. When I switch to the, I'm going to do something here real quick, so it'll load quickly. 5, use evening session. It should load pretty quickly. That's your overnight, right? So this is Asia, right over here, roughly. We gapped down. They drove it all the way down. So a couple things to note. Even in that drive down, unable to test the low, right? Number 2, this is our afternoon swing high, getting above that level, right? So I just kind of have a little note, make it innocuous. So make it a color you usually don't use so that you know it doesn't mean anything, but, so we'll use gray, okay? That is the afternoon swing low. See how they're trying to pull above? Bulls will want to hold, swing high. Bulls will want to hold above. Bears will want to get it back below. It was a battle area. You can see it was a prior support area to the left. So it's just a gauge. It's not a support resistance area for me because I base my support resistance off of TPO and volume profile and not off of swings. Why is that? Swings do work. Sometimes they don't work all the time, right? So they make better observation points than anything else. And I wonder if everyone has the link for the room. So let me post it up again. And copy URL. I think everyone's gotten so used to me not showing up at any reasonable time that they're just like, well, we'll just show up 2 minutes before they open. Great. And 2817 is value area high as well. Thank you, Randy. So what's the thing that we can learn from this? Number 1, the moves opening up have been pretty vicious, right? This whole area was poorly auctioned. The whole thing can get re-auctioned. Just remember that. Number 2, neither buyer nor seller are in control. They're both struggling to get control. Okay. This is what it looked like overnight. And you can see as we pushed in overnight, we initially came to resistance. It's, right over here. You can see that they tried to hold resistance initially in Asia. Support, broke underneath, became resistance, consolidated, broke above, backside tested, shook everyone out about 1 a.m., pressed right up to the next support resistance level, rejected, got in, consolidated above, backside test, pushed. And then this right here from this swing low in Asia is your almost 50-60 retrace. They haven't quite hit it yet. And now that overnight swing retrace, if you measure it, and I don't, so I don't particularly care about it, that's your 50-60, and that you probably also want to measure your 50-60 over here as well. And that puts 2806 to 2802 is the logical area. I would focus on the 2802 area, 2803 for responsive buyers because there's an anomaly there, and that makes for pretty great support resistance, right? Next, if you look at the profile, which we'll pull, and wow, not fun. Let's fix this here real quick. I'll dash this off to the right. Close this. Go. File, save all. There we go. ES profile. You know what? I'm going to make a second ES profile here, so I don't have to destroy this. Let's see how I can handle this. All right. Okay, so while this loads, what you're going to see is buyers are in overall control still, right? There's absolutely no question about that. How many days do I have loading this? That's all right. Whatever it is, I'll just scoot it over here for a second. Chart, detach chart. And in the meantime, what I will do, there we go. Just nice and calm. Erase all lines. Okay, number one, what's the market doing? Well, first of all, notice there's no bear market. You see that? That's a little tiny pullback is all that's going on. Don't get uber bearish, right? Easy way to gauge your bearishness is to go, it's normal to get a 50-60 retrace, right? Pretty sure when we get in here, if we get in here, you'll find responsive buyers. Of course, that'll change if we go make new highs. B, it wouldn't take a lot to get to new highs. C, this is your current true swing low, right? That's the last major swing low off a big push. You're going to have to break this to get down into this area. C, I'm just going through the steps, right? This isn't anything I make up every day. I just have a step up and a step down process. There's not much in the way above. So this is very important to people who've gotten bearish. See how underneath we have these points of control underneath? There's a volume point. These are volume and TPO points of control. If you don't know what that is, get it Mind Over Markets by Dalton. There's another one on volume profile. I forgot the guy's name. I'll look it up. But Mind Over Markets, first 5 chapters, about as exciting as your first physics book you've ever read. But very important basic concepts of trading. The market likes to come and take care of these points of control and gives you a lot of information. So, for example, I would have thought yesterday we would have come down and tested that, right? So this needs to be repaired. But more importantly, when I look above, see how there's no naked point of control that's not been tested? All of these upstairs have gotten tested. That makes it very easy for the market to do this. I'm going to give you an example of that, okay? See back over here? See when we're over here, and I look and I go, hey, so let's say we were trading right over here. I'm going to bring it all the way back. This applies to all markets. I don't trade the first half hour for those who aren't familiar. So if you are, obviously you need to drop off and take care of your business. So what I would have said here is this needs to be tested. This is a weak support, and then this needs to be tested, right? And then which way? And then I would note we have support, resistance right there. So the chart would look something like this. But then what I would say is I look behind this, right, and I look up, I'd go, hey, see all this area through here? See how the first TPO and volume point of control is sitting right there? So there's a volume point of control right here. It's weak. It's a 2800. It's a natural resistance area. But when they're combined, they're strong. That's my read, not anyone else's, right? So what's important or not important about that? What is important about that is it creates free space to flow through. Now, watch what the market does, right? So what we would have is we'd have this, right? If I was going to throw up zones, there's other stuff in there, but we're just going to make this ABC easy, right? And then I'm going to make it the same color, but that would be a weak support resistance zone, right? Watch what the market does, okay? So notice we traded up to resistance, right? See how we gapped? So we had to gap. When you look within that gap, so notice when we got to the resistance point, see how it came in? Stutter stepped, closed above, backside tested. So what happens to prior resistance? Becomes support. And then you look up and you kind of go, well, geez, there's no clear resistance area. So there obviously is. If you look back to the left, there was support resistance area. It doesn't mean we go from 2736 to 2800. But watch what happens day over day. Backside test of support. Push. Notice we get close to the first resistance area, right? And watch how the market, see how the market comes right to that TPO point of control? This is what's possible when you get big blank empty spaces. Doesn't mean it'll do it in a day, although it could. Doesn't mean it will, just means in general, that's a good upside target, right? So take that lesson, right? Come over here. Look at the chart from right now, right? We'd erase all these lines. And what we would do is this. We'd look above and below. And what we would say, and there are support resistance areas in there, and clearly the market just doesn't go in one line, but what you would say is, this wants to be tested. I'd bet dollars to donuts we get a response there the first time, right? And I would look for the traps back in below the swing lows. This was just too big a stretch energy-wise to get to. I would not be surprised if we got there today, got in, panicked people out, trapped back in, and pushed back in because it's becoming a big balance area, right? So here is your point of control from yesterday, right? Below it, there's no points of control below. There's areas of support, but there's not areas of points of control. So the market wants to do one of two things. It either wants to come in just from a very simple perspective. Either wants to come up here and test that, or you want to come back down here and test that. Then if we can get underneath 2780, that opens us up for potentially 2733. Now, doesn't mean I know which way the market's going to go. It just simply means I look at this and go, if we're not below 2810, 2895 is a potentiality within the day. Now, next thing that we do to figure that out, I'm trying to help everybody, is understand the range. Yesterday we traded 2835 down to 2790. If you remember yesterday morning, I marked the areas off relatively plus or minus 50. 2809 brings up 2860. That would be an extreme, right? 2809 brings up 2760, right? So if you look at this, mark them in green, that would be an extreme range for ES for the day. You're going to need a driver, right? And if you'll look, the nearest support area to that is that 2754. So we would likely get a response here, even though this is weak because it's such a big stretch, right? And we would normally, when we get up here, this part of the chart needs to be repaired, even though there's no naked point of control there. And that would probably exhaust up in the 2860. What's more likely? So then you take your same chart, you go 2814, excuse me, the close is 2810. You add 30, that's 2840, right? We'll just dash that. 2810, you take away 30, that's 2780. Okay, this is your more reasonable range. This is at extremes, right? So when you look down here, minus 30, there's a naked point of control and a naked TPO point of control. You're likely to get a response. What I'm trying to set up for y'all in doing this is, where are we likely to get the big swings? Well, this is a poor high and this is a poor high and needs to be repaired. So if we get excess up here, that's probably about the top. Whether we close at the high or reject out of here, I don't know. It depends on the chart, right? Down here, this is a poor low, needs to be repaired. If we can get excess underneath into the zone, we're likely to get a response. Those are key areas for my more patient traders. You're waiting for stretches outside of this area. Where will be the hardest area to trade in terms of getting stops and chopped? Right there. Why? 1, 2, 3 days of acceptance all in this area, with the most recent day being yesterday. All these prices have been well checked up upon. So if you're going to get slippery, that's the area where you'll get slippery. And you'll notice yesterday when we pushed all the way through the area of acceptance. We pushed all the way through this area of acceptance and got responses on the edges of both those areas. And that makes sense, right? See how you can just start to look at the chart and go, I kind of have an idea of where we'll reject and where we'll accept. Just like this morning, we rejected out of unfair prices. This would be generally easier to trade through for the market. It would require less energy. Okay. So all that being said, what are we trying to accomplish, right? I'm not trying to take up every setup that I get, whether it's CL, ES, or NQ. What I'm trying to do is find where the edges are, because I'm a contra trader. I'm not a momentum trader. And then I'm trying to say, what does the setup look like when we get to those edges to take the trade? And then there's one last piece. Even though I didn't trade it with ES, it happened with me. It was CL and NQ. I missed my NQ fill yesterday by 2 ticks. It was worth almost 80 points, right? Didn't get filled. I didn't chase it. Happens. Sucks. Don't blow up your account when you miss your trade. I missed CL by literally one tick. I actually think it went to the ask with a no fill for me, right? Not a big deal, other than it's frustrating to watch it go 100 ticks after it gets filled. But I know my entry process is correct. I got emotionally compromised yesterday afternoon, so I couldn't trade after the fact, right? I was toast. So my day was kind of shot. All my next setups came at the end of the day, and I wasn't willing. I had no P&L. I wasn't willing to go negative on the day to take my setups. I was running out of time because what I do, remember I've been doing this for 20 years, is if I get down, I scalp like a banshee to get back to flat, right? Nothing I can call. It's literally in and out for 2 and 3 and 4 points on NQ as fast as I can. I generate a boatload of commissions, and that's how hold on one second. Derek, excuse me, I apologize, Dave, if you're listening. I assure you that's completely an illusion. But thanks for the compliment. So my whole point behind all of this, is I'm trying to find the edge where I think I can get a big trade on, and in between, keep adding little bits of P&L and not go negative. It's a big hat trick to pull off, right? You have to be willing to lose money in order to take the trade, but you don't want to lose money. And how do you not lose money? By following your process through ABC steps, right? Now, what's the other piece that's causing me problems right now? The market is moving fast as hell. Liquidity has dropped, particularly in NQ, massively. Whereas a week ago, I had all day long to get my entry in, and we were getting 50, 60 retraces off the entry, so I could go half entry. Now I'm putting my limit in for my order and it's a natural defensive deal, right? So let me slip this into sim for a second. Trade simulation mode on. Right. So I'm going to say, so let's say I am trading NQ, right? Let's switch gears for a second. Let's say I'm trading NQ, and I think, right, although it's not setting up, let's say we're in this resistance zone, and I think it's short, right? So the dome is moving so fast through here, whereas before I could watch it, and I could go, oh, well, they're trying, they can't get it done, so on and so forth. I think that high will hold. But see how this is just, if you'll watch, we fly through here. When we get a buy pressure, it just goes. And it goes vertical really quick. It's hard to keep up with. And notice that in the dome, it's literally jumping 2 points up and down. And that's because, for whatever reason, market makers have taken away liquidity. See that? Where you're like, oh, it's rolling up, and then all of a sudden, bam, 3 down. So if you trade NQ, you're using ultra tight stops, and you're not really, really, really good at putting those ultra tight stops in the right location, prepare to get screwed. You're going to have 5-point stops, and you're just going to hit 5-point stops, stop after stop after stop after stop. Next, because of the speed and the range of the market, you need to make sure you're on a stretch and know what your setup looks like here, right? So if I looked at this and said, for whatever reason, oh, I think it'll hold, it doesn't give me much time to think about it, right? I pretty much have a split second to take a trade. And more importantly, so let's pretend I thought this was a high, right? Here, we'll do this. So market, it's sim, means nothing, right? So I short it, right? So literally within seconds, let's say I want that 73.48. So it's either going to go, so I think it's going my way, right? So I think, oh, this is great. I'm going to sit on the trade, right? I've got it nailed. I'm either going to nail this and it's going to roll hard to the downside, or, right, and I go, oh, I'm going to be patient, because if you notice just a second ago, I had about 4 points, 5 points, $80, $100 a contract, right? So I go, I'm going to move my stop back, and then all of a sudden, just in a blink of an eye, it's going to come right back and snap you out of it, right? It takes a little more commitment to stay in the trade right now, right? And because it's moving so fast, this is important, right? Because it's moving so fast, it makes you jittery on the trigger, right? It's hard to just sit there on the trade and let it work out and let it stop you, right? And the other part, which I'm hearing from people, is if you don't put your stop in right away, it's jumping so quickly. So see this right here? This is the backside of support. But I think I've gotten a good location, right? I've got basically $100 a contract. But my $100 a contract is disappearing in a split second, right? So it brings up the question, am I about to have a 30 or 100 point move to the downside here? Or do I need to take my 5 points before it comes back because now I only have 1 point, right? And it really affects the psychology of how you're trading, particularly if you're a scalper, right? Because I just had $100. Woohoo, doing great, right? You have 5 or 10 contracts on, it's a good trade, right? It's a K. But if you're going, I think I have 30 points here, well, now what do you do? Because it just came all the way back and you're about to go down, right? And it wouldn't take much for it to jump up and force you into a losing position, right? That affects your psychology of how you're trading, okay? It's not, again, that's in sim. It's not a good thing. It's not a bad thing. It's just going to change how you trade a little bit. And so then you get constantly torn between, well, do I have a 100-point trade here and I'm going to kill it? Or do I need to take my 5 points right now and punch out? And it tends to make people very, very nervous. So that is why if I'm not getting my exact entry, I'm not chasing one way or the other, because if you'll notice, right, let's say 73.43 was my perfect entry, right? And then I come down here and I said, damn, I missed it. So I enter 73.39 and I have a 5-point stop. I'm in danger of getting stopped out on this trade, and it may still work, right? And I'm very anxious, right? That increases all I'm trying to communicate is it increases the difficulty of the trade for someone who's trading, and you've got to know which side of the trade you're committed to, right? As it is, I have no setup one way or the other through here, right? To trade this one way or the other. Like now, I was up 5. Do I cover it and do I take my 1-point loss? Very hard is what I'm trying to say, right? When NQ increases speed, you've got to calculate that into your head and figure out what exactly it is you're looking for and what combination of things you need to see in order to take the trade. So that's one point. And how do I do that? What I am looking for. So now I'm going to explain. First, let me show you what the NQ profile looks like, and then we'll jump. I've already posted the levels in the room. Okay. But we are going through these. See how we opened up range? We went from nothing to massive, right? So we're sweeping ranges. Ranges are 100 to 130 points. Be aware. If you're 50 down and you think you're going to catch a reversal, just know the market's slipping, and it's slipping really fast when it's breaking. It's trading. See how it held support here and then swept all the way through. Whereas you look back a couple weeks ago, see how we were holding key levels within value, but speed has increased, right? And now, right, because speed has increased, you're getting swept through value areas and they become more dangerous, okay? So support areas within value area until range comes in are going to be more challenging for you to trade versus if you wait for the anomalies and the setups outside of value area, right? You are absolutely killing it. You just got to decide which one you're willing to take pain on. So now going through NQ, first of all, still not bearish, right? See that? Just nothing bad about that chart. There's your swing low down there in early March. We have not broken that. Until we do, nothing really bad going on in this market. It's just coming back and refilling bad prices. When you go straight up, it leaves very little support. So now when I come and look at this chart, what do I see? Hey, I don't have any naked volume points of control and naked TPO points of control above, right? I have a naked volume point of control, right? And I consider those generally weak, right? But it's all you've got up there. So I would say these are on a scale of 1 to 10. This is a 10. These are 5s. Simple as that. They work sometimes they don't. I don't lean on them very hard without a lot of extra evidence. Okay. It's easier for the market to trade up. There's less resistance above than there is below. These are key support areas. Notice that we just dipped underneath the swing, found responsive buyers. If we are weak, this and this is still what wants to get tested. Pretty straightforward. And if you look above, right, this needs to be tested. It's in a pretty ugly profile. There is an anomaly there, but it's not a strong profile. That whole profile could get easily tested. See how that was pretty clear and you got resistance out. That was a white zone, by the way, the other day. And then the next thing that needs to get cleaned up is that right there. But there's easier up than there is down. And I don't know. And there, once we shake everyone out and everyone decides we're going to 0, is your clear and present target to the upside, right? Which is 77.31. When we get there, I don't know. But I know if I get above all this noise right here, that's a pretty easy trip, relatively speaking. Okay. So when I'm looking for, now let me go to my setup and what I am looking for, right? And this goes to the room really quick. And I know I have some CL traders in there real quick, so I just want to cover, I'm just going to throw CL chart up really fast just to talk about it so you can see it. No damage on CL. We're consolidating. If you look at that, it's in a solid uptrend. All we did yesterday was we came down, checked on this point of control. You'll notice today we've come all the way down into unfair pricing. There's no anomaly down here. So we're just really, this is the anomaly right here on the over-under. And you'll see, pretty sure I have this marked off on the chart. I'll find my CL chart in a minute. I think I have it right here. Let me see something really quick. I don't have it marked off as white. So notice overnight, right? U.S. session, prior days high, low. We break in Europe. Come into support. See how that support came in? Traded a little bit past it, but we responded back up, right? Got underneath. Didn't quite make it into these two swing lows down here, which you normally would want to click. What would have been great is if they clicked underneath and trapped back above for a slingshot. Backside tested support, rejected. First time, so tested from below, tested from above, over, under, backside test, trapped back into prior day's session. And given the way the market's trading, there's no reason why we can't come back up and test the 59.40 and 59.60, and then your big resistance up at 60 potentially. But the one thing you'll notice on CL, look, it changed. See how there was just no rotation, and now we're flying all over the place? Things have changed in CL, right? It's loosening up, and people aren't as sure it's going in one direction, so it's racking people left and right. Okay, so now I've covered the zones. I've already posted them. I want to show everyone in the room what the hell. So see how I went from a 5-point profit on this trade to now I'm down 7 points, and the market's jigging back and forth so fast, right, that if I don't have a very exact setup, right, I can go from, oh, I'm up 5 points to, oh, I'm down 10 points really, really fast, and it makes people nervous. So what do you have to do? You have to get your setups really down very, 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 very solidly in order to make money, or you're going to get your ass kicked in this market, particularly in NQ, okay? So what the arrows are, I'll cover it in NQ and I'll cover it in CL. Bill, are you in the room? I think you are. And I need to mute everybody. Sorry. I'll take care of it. Okay. Guys, for in the room. So my shifts up and shifts down are now with arrows, red and green, a little more logical and easier to follow. Okay. What the arrows are were these that I've been talking about in the room that Bill and I have been playing with. We've been playing with them for a long time, and we finally had a way. We had them. We couldn't make them work. Now we've got them working. So we're looking for a specific setup. What these are indicating is a force of momentum on a shift, okay, where both the bar and the point of control shift in a specific way as to require a lot of energy to make that shift occur, okay? So what we are looking for, right, on the setup is we are looking for a fractal up, fractal down, a shift down, and see how you close behind it right here. Now, location still matters and thought process, but see how we shifted behind it right here, and then push. And I'm combining that with a bigger picture, right? So if I short, so remember, if I go long, my target's up here. May not make it, right? But if I get long either here, right, or here, depends on, so there's a debate between me and Bill as to what the proper entry is. I think it's probably closer to this than it is this, but it doesn't matter. They both work at a high percentage, but the requirement is first is that you have at least one fractal and preferably two fractals, and possibly with a speed bar. Guys on YouTube, I can't explain all this in any kind of reasonable fashion. The guys in the room and gals in the room know what I'm talking about. Okay. What this does, this shift, is increases the probability that the fractal up, fractal down will increase the win rate. So see how I have this fractal down, fractal up, shift up, close underneath the shift, right? So my entry's either here or my entry's here. Get pushed away, my stop goes there, And as you can see, usually what happens is an immediate push down. Now, if I shorted here or here, right, go 73.47 to 73.38, almost 10 points. And notice, because of the speed of the market, I've got very little time to make that decision. I've got to know that I'm going to take it. Guys, unless I say this is the setup and I'm taking it, ignore these arrows till I can coach you all through this, right? Both in group and one-on-one session. Ignore them. It took literally weeks for us to understand, or months, because we've had them on and off, to understand how to use the shifts properly, but they make a big difference, okay? And they increase the win rate. So again, if you look, fractal up, fractal down, shift down, close above, push, and now what do you need to have? Stop goes below here. You got to have the concept of which way the thing is going. So this is the weeds, right? It's a 3-range chart. You got to come back and look on NQ and go, what's NQ doing on a 5-minute chart, right? And if you look at that, this is today's 5-minute chart. See how it looks like there's a boatload of activity? There's not. We're balancing around this support area. We're still within the first 5-minute bar. Nothing's going on here. This is all pure scalping, right? Versus, look at the range from yesterday. Pull it in. See how much we were in balance, broke balance, range expanded. This is nothing. It's important that you have the 5-minute chart up so that when you look at this, you don't get lost in the weeds and try to take everything in sight. B, what does the order of support, what does the order of decision-making go? In the chart, yellow zones and white zones are the highest odds locations. That is, if I had no other way to take a trade, right? I didn't know anything about delta waves. I didn't know anything about 3 up, 3 down, shots across the bow. I didn't know anything about price action. And I just needed to go, where am I going to trade, right? Well, what I would do is this, right? I'd go if you look, this is all overnight, right? So let's just start here and say I'm trading NQ. There we go. We'll start at midnight. I'm looking in Asia, we're above support. Here's the anomaly. I push down into support. I'm looking for a long. Where do I think my long will go through? If I can find location, I think this is a good zone. We came in, we rejected, got above, backside tested, right? This is a 50-60 retrace right here, right there. Pushed up, and I think we're going right here. So they act as both targets and as support resistance areas. So if I'm trying to get long here out of location, if I get a setup, I think we're going up here, it may or may not work. But if I can get backside tested into this location, right, and I can get my long and hopefully it sets up. This is a 1 a.m. algo, by the way. I happen to be here at 1 a.m. That was an algo that triggered right at the open. It was the shakeout, and then they smoked everyone and pushed it right to resistance. Next, if I'm looking for a short, whether I had a setup or not, this is resistance. Pushes into resistance, rejects out. Where does it go? Bam, down to support. Gets to support. First time it tested, and that's just prior to London Open, which is still 3 a.m. Gets into support. Where do we go? Right back to resistance. Why? Because the underlying concept is that markets travel from anomaly to anomaly. It's what they like to do. All this other stuff, the arrows, the fractals, all that, is to help me figure out how to narrow my losses when the zones get blown up, right? And how to figure out where the turns are coming very pinpoint so I can add leverage to my thought process and to my entries, exits, and stops, right? That's all it is, okay? So when I'm looking here, I won't always get my setup. Prime example, see this push down that came right into support, and I get the speed bar and fractal, but I don't have a setup here. See that? I need some kind of shift, and I simply don't get it, okay? Where my entry would have come, according to my process with regards to triggers, fractal down, fractal up, shift down, right? Now see how we closed underneath and we pushed a little bit, but it's shift down, and then, but see the moment we close back above this shift right here. It takes a lot of energy to make this happen. Bam, take off. What's my problem with my long here? I'm going to push right into resistance. So I'm going to need a scalp out of that. Chop through. This is a light blue zone, which means it is support resistance, but it can get traded through. Come all the way over to the morning, right? See how they chop through this? There's a reason why they chop through it. Rolls down, right? I'm looking for my entry long. There's fractal up, fractal down. I don't get a shift in between. Push down, right? See how I get these shifts lower, and then as soon as we get a shift up that counters that, it pushes. It's just a hard place to trade. Why? Not that the setup didn't work. This zone gets traded through a lot. Sometimes it works, sometimes it doesn't. I'm not crazy about trading those blue areas, right? So now if you'll look this morning, right, and where we're at, notice how many times that blue zone has got traded through. So if you're going to try to trade this morning as support, just know sometimes it works and sometimes it doesn't. It's a 60% thing, which isn't really high enough for me, right? Lastly, what I am looking for to put all the pieces together is I'm trying to balance my view of we should get up here. This is resistance. We should, right? But see, when I get this fractal up, so I'm pointing right here. So I get fractal down, fractal up, shift down, close below, and I get this little push. I've got to figure out in my trading when I'm looking at that, if that's worth 4 or 5 points, hit it and get the heck out, right? Or is the market going to pay attention to its bigger targets, which are the yellow zones, right? So this is complicated in that fashion. If you want easy, this is not easy, right? But what it does, if you look at yesterday, and the reason why I went ahead and threw it on, right? So if you look yesterday, and I said, oh, if you remember in the preview when we were at 8:30 and 8:55, and it was right before Econ, and I said, if we weren't right in front of Econ, that is my perfect entry. So there was resistance up here, right? See that big stretch at a big delta wave. Notice that big delta wave didn't get me over my swing to the left, right? What I was missing was a fractal trend break, but it pushed right into resistance, right? If I go look at this chart and I go 50, 60, retrace, right? That's the 50 retrace, that's the 62. And what do markets, this blue line was not there yesterday. What do markets like to do? Get to the 50 retrace. Every guy who's read or gal who's read a basic technical analysis books goes, 50 retrace, that's the mid. I can short it, and it's easy. I'm going to put a 5-point stop. They short roughly 73.88. They're going to go, I'm going to put a 5-point stop. It's $100 a contract. I don't want to lose a lot of money. We run all the stops, fractal down, fractal up, right? Shift up right at the top, close underneath. And that's why I said it was 8 minutes to 9. I don't trade in front of Econ, but I said any other place, I would short this trade 100 times, and that is what you get when that sets up perfectly, okay? If you will also look at the bottom, when we rolled down, right, if you look to the left, right, see how we were retracing the overnight swing low just before the open at 6 a.m.? Now what am I looking for? I am looking for, right, a fractal up, a fractal down, and what I'm hoping for is a shift in between when that fractal gets formed. So there's my fractal down, fractal up. There's my fractal down. There's my shift down right here. See, as soon as I close behind it over here to the left, bam, pushes, swing low, swing high. We make a 50, 60, right? So remember, my fractal's all the way down here, and the size of the stop may have not been conducive to taking the trade again. But if you look, you got it again. Fractal up, fractal down, shift down, closed above, launched, right? And then if you look at 9:30 as we pushed back, let me show you this again, right? So again, look what the market did, right? So people are trying to catch that continuation going, gosh, it's got to be going lower, right? There's your 50, 60 back. You see everyone that shorted it because you can see the response in the market. Run all the stops, which is very, very normal, right? And if you look when we get behind there, right, fractal up, fractal down, shift up. So I need to get behind this guy right here, right? comes over. Notice that we don't close behind. I could have shorted this if I'm uber aggressive, but I want to get behind here. You could have counted this technically as behind, or you want to get behind this. But now if you look over here, see how you got the pattern again? Fractal up, fractal down. This is the short I missed, by the way, by, I think I missed it by a tick, right? Fractal up, fractal down, shift up, shift down, right, to close underneath. Close underneath this last fractal. That's the trigger, 50-60 retrace. Bam, straight back down. And that was all she wrote, because we just proceeded to fall massively from there. And you get the turns again at the bottom. They work. Long story short is what I'm trying to say, guys, is in the room is once I can coach, which I coach most of y'all one-on-one, once I coach y'all through and take you through all those steps, what this should do is increase the win rate of the fractals, both on ES, NQ, and CL. Another note, ES has a higher failure rate on this than CL and NQ do, okay? I can't fix that, and it's why I've started trading ES less. I don't know why I've had such a difficult time hooking it up. I'm working on fixing it, and I like trading ES. I just haven't been able to make it work with my process, and my higher win rate, my higher P&L is simply coming on NQ and CL right now, so that's where my focus is. Anyways, that's what the levels are. That's what those arrows up and down are. It's a lot of noise, and what you have to do is slow down. Take your time. It takes a visual amount of time to see them developing in real time, right? So if you look up here, right? So see how this is resistance, right? And it did not reject straight out of resistance. It happened right at 9 o'clock. What am I looking for up here? What I like to see is pretty naturally fractal up, fractal down, shift, right? And there's other ways to use this, but this is the most basic. And also what would be nice would be a fractal trendline break, right? So this is NQ in real time. Next, I know, right? I am pushing above my 8:30 swing high, 8 o'clock swing high to 8:30 over here, right? Everyone underneath is trapped. I can see clearly this is what I need to get underneath to push lower. We're not in a bear market, so it can push straight up. Because remember, once we clear this, there's only a light blue zone. This is the clear and present target if we don't get back below 73.60. This is the target up. Notice that the volatility has dropped pretty significantly. We're changing literally like the Mad Hatter. It's a bipolar market, right? We go from wide ranges to zip, right? That's making the trading a bit harder. When I go look at CL, right, what am I looking for? Same thing. I don't have the zones from CL on here. I will fix that in a minute. I should have them over here. Where's my CL zones? So I have my CL zones parked over here. So let's just get an idea of where we're at really quick. I need to organize the screen. There we go. Okay. So the first thing I look at is I see on CL, I'm not at a clear support or resistance area. I now have support below at 58.62. I have resistance above at 59.40. This is what's called a retail trade location. Prior days, the high and low. It attracts a lot of noise. I hate trading at those locations, and almost every day trading service you're going to see is going to talk about traps above and below prior day's low. Every freaking guy on the face of the earth and gal is trying to trade it. I hate it. I'd just rather be away from it and trade my zones, work much more effectively trading the anomalies and prior day high, low. It just creates a ton of noise, and it's a great way to be a 50-50 day trader and blow yourself up, okay? So that being said, when I look at CL, right, this morning, what am I looking for? If I'm at a support area, and by the way, 58.20 was just that swing low, right? I see, look what I put the pieces together. So I have a swing low at 58.20. I'll mark it off. That's my, it's actually 58.16. There you go. They missed it by a tick. They front ran it, right? So if I was trying to figure out a reversal from there, first of all, biggest push to the downside, right, on that wave. So I'm going to mark that off because I know if I get above, probably get a short squeeze, right? Number two, as I'm pushing down, I'm looking for a fractal trend line break. So I'm walking y'all through, and CL is easier to do because it's just slower. There's my fractal trend line break, right? What else am I looking for? Fractal up, fractal down with a shift. Don't get it here. Fractal down, fractal up, no shift. Fractal down, fractal up, shift right here. Close. There's the shift up. There's the close above. There's the push. That is exactly if I'm looking for a turn. It is not kind of what I'm looking for. It has almost all the elements minus an anomaly or a key support area of what I am looking for to get a turn. And right on top of that, Algo is kind enough to trigger us with a 3 up, 3 down, which goes right here. So the close above generates a move from 58.60, right, up to 59. Okay, that's a damn good trade. And that's a 12 range bar, actually. So something's wrong with that. Let me fix that real quick. Let's get that right. Here we go. This will change things. Sorry. Bigger picture. We'll narrow it down. Okay, here we go. Now let's look at the bottom again. There's your fractal trend line break. Why did this whole chart freaking change? Oh, because I drew those lines. Here, let's do this one more time. Since this is what I'm actually triggering off of, right? What am I, again, remember the elements that I'm looking for. 3 up, 3 down, fractal trend line break. Now, notice here on this turn, I did not get the fractals on this range at the bottom, right? But if you will look over here, I ended up with zip. It didn't give it to me on the 3 range, which is fine. Why does this look funny? That low was 58.20. Let's draw that. Oh, there we go. 58.20. It was 58.16. There we go. So I am looking for a fractal trend line break. See that right there? Those fractals? Trend line off the fractals. Right? So, in addition, right, I'm building evidence to make this trade work. Right? 3 up. Excuse me, 3 down. I'll draw a line across it, right? Again, this is how you stay freaking unemotional. So I know when I get a close above that, I've got a pretty good chance of making this push. You'll notice this is showing me that these, in order to get these, you actually have to have a pretty good force of energy on any time frame. They're pushing down. I don't have a fractal to the downside, right? So, therefore, I don't have a trigger, right? But now you will notice right over here, see this? On my 3 up, 3 down, I get my fractal up, fractal down, push to the downside, close above the fractal, excuse me, close above the shift down, close above the fractal, and that triggers me for my push towards what should end up being 59. And there you go. Okay, and if you'll look, so I want to show you that because when you're on the smaller range, it can get quite tricky. So I want to look at that a little bit closer just one more time, right? So we can see how we would have actually executed that in real time. Fractal trend line, right? No, fractal up, fractal down. Hold on, I lost my place. There we go. Fractal up, fractal down, shift down, close above. That's the entry I actually want, or close above. So you either entered 58.43 or you entered 58.49. Either way, right, before reversing, it pushed to 58.63. Now for me, right, that is from 43 to 53 is 10 cents. 53 to 63 is 20 cents. That's a good trade for me, right? And then I'm working the process from there, right? So I know I've come off the low. They've attempted a trap. What's the next thing that they've done? So notice how big this push is over here to the left. See how this is the biggest push near the low underneath here? And we can't break the low to the downside. I'm talking about this delta wave, right? I'm looking over here to the left. As we're coming down, right? Notice I get a fractal on top, fractal here. That sets up my fractal trend line, right? Within this, I got fractal up, fractal down, shift down, right? And I want to do one of two things. If I'm going to be aggressive on my trade, right, I can do one of three things. I can take the shift up and pray that it breaks. This has the highest failure rate, by the way, but the smallest stop, right? I can wait for the close above, 2, entry, or I can wait till I get above, 3, right? Now it's at 8:21 a.m., right? Any of those entries, as long as you use your swing low as your stop, right? As long as you use your swing low as a stop, and you were betting that that 58.16 was going to hold, right? Generated your push, right? So now let's say I entered my worst possible entry. I took 58.45, okay? 58.45 gave me 58.55, 10 cents off, scale. Most of my risk is out of the trade at that point. I'm down to 35 cents. I have about 11 or 12 cents stop on balance, right? And then I can take it and free ride it up back to wherever my support level is above, whatever targets I have above. And that trade, right, ends up being worth potentially from my worst entry, which would have been 58.45 to 58.90, almost 50 cents or $500 a contract and structured. So I'm putting all the pieces together, right? I'm putting all the pieces together to make a good trading decision for my longs and my shorts. That's how I stack it all together. That is not easy. It takes time. You have to be on point. You have to be well rested. You have to know which market you're looking for, and you probably can't do it in more than 1 or 2 markets, realistically. So now that we look at this, right, what do I have here? Fractal up, fractal down, no shift, right? I actually had the shift over here, closed underneath right here. See this? This is my trigger in, right? This would have been my stop back here, and it pushed down. It's obviously has not broken yet, right? And what I'm looking for another entry is I'd like to see, I would have liked this to shift up and close underneath to set up a roll to the downside. Hasn't done that. And I need to get my head clear now to go and set up my trades one way or the other. But that should significantly help the fractal up, fractal down setups. And by the way, if you get behind this, you've got parallel fractals over here, right? You close above that, you're probably going to push back up into the 60, which is actually quite logical. So anyways, that's my 2 cents about that. Anyone have any questions? It's a lot, right? It's not a straightforward ABC. And that's why I'm not trying to trade everything. I'm trying to slow my roll down and get my key areas set up and not constantly try to guess where the market's going, and instead let this be my guide, right? This is my underlying big roadmap of the city. These are the red lights, stop lights, and yield signs of the city, and they help me get my entries one way or the other without getting financially obliterated. And if I miss my trade entry because I was distracted or talking or whatever it was I was doing, I missed it, and I just lay back and wait for the next one, which inevitably comes almost every day. And I try to get rid of as much bias as I possibly can because I really suck at going, this is what the market will do this week. Okay, and best way to gauge that is, right, if you're predicting the weather, look out the window. If it's sunny now, I bet you can guess it'll be sunny in an hour. If it's raining now, I bet you can guess it'll be raining in an hour from now. Will it be raining at 5 o'clock? Hard guess, right? Especially if you live in Dallas. Probably not, actually, right? You live in Seattle? Maybe you can do it. But the further you go out on the weather, the harder it is to predict, right? Watching a news station. Same goes with trading, right? Particularly when you're trading leveraged positions, right? And you're trying to pull money out. And that's why people have a difficult time with day trading. Your bigger picture, right? So there's a guy that's in the office down the hall from me, and he's told me, right? I don't even know where the Dow Jones is, but he told me it's going to 15,000, right? He told me that in December. I don't know where it is, but I know it ain't anywhere near 15,000. I haven't looked at the Dow Jones Industrial in freaking a decade, so I could care less. But wherever it is, he was wrong, right? He was so bearish in December, right? Now, and then he meets me in the hallway the other day and he goes, I still think it's going to 15,000. I'm going, that's great. If I listen to you, I'm bankrupt, right? I'll stick with my average trade window, which is 7 to 10 minutes, right? Occasionally it stretches to an hour. Anything over an hour is too long, right? Unless it's just free falling in my direction. And that's all I'm trying to predict is that little window and not everything else. And if it's moving too fast for me to process, right? So I want to point out fractal down, right? Here's fractal down, fractal up. If you close behind this, that's a double fractal right there. We close above this 59.01. Your stop has to go down at 59.80, 58.80, but we are very likely to force a short squeeze to the upside if we close above this, okay? And back to retest that 60. That's my 2 cents. On the other hand, if you get a fractal up here, you have shift up, shift down, and we close underneath these two. Now you come back and they'll end up with a profit-taking session. So not a lot of energy there. Let's go take a quick look at what everything else is doing. And you will see fractal up, fractal down, shift down, pushed. And it's just chopping around here. Really, it'd be nice if we could get some resistance. This is value area high. It'd be nice if we could get a definitive close underneath and a stretch back into this area for a short, right? But clearly people are fighting it. Now, people get too bearish when you get those big down days. Let them get smoked out of the deal and then look for your trade would be my very, very, very strong suggestion on this. We're only at 41. We're having 100-point ranges. Let it stretch till it's obvious is my suggestion on this. And let the setups come as they will. All right. So the best setup is when you get this, by the way, right at the apex is a fantastic turn setup. Right. So in this particular case, it only gave you a few points. And again, because responsive buyers are there, you're going to be pretty fast on the trigger if you don't want to get killed. So anyways, that's all I got. We're clear, guys, on YouTube. I'm sure that was utterly confusing. If you'd like to visit the room or if you need help with your trading and you're interested in one-on-one coaching, I don't coach everybody. We've got to fit time frame and personality-wise, which not clearly everyone's going to like the way I do things. So, but everyone's welcome in the room. And I do my best to help people get at least break even and hopefully profitable. Don't blow up. It sucks. Personal experience. Anyways, have a great day, guys. Trade smart. Send me an email at TRADENPERFORM. It's on the description of this video if you're looking for it. And anyone who emailed me, I will respond after 3 o'clock today. Have a great day. We'll talk to you later. Trade well.